Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Thursday, the 3rd of May, 2018, 4:40 p.m. Central Daylight Time. You know, you start the market off, you go down 23,467, and you rally almost 500 points off the low. If you try to explain this to anybody, it's very hard. And no, it's not just a game where you can buy the breaks and it comes back up. Sometimes you get the rally first and then you're dropping down. So it's all over the board. Traders just don't know what to make out of everything. And you see that in the bonds and the notes, where yesterday's moderate FOMC statement followed by watching in Europe, their numbers coming out on their inflation readings that are not as strong as they were hoping for. It's got everybody wondering, where are we in the economic cycle? We know the U.S. is in the tightening cycle, but we also thought that we'd see Europe. We thought we'd see China. We thought we'd see other countries in Asia getting their economies into that. We're not seeing that. One economy that's getting killed, take a look at the Argentine peso if you want to see a market. I think in a week it's down 10%. So they're getting clobbered as our rates are going up, and the question is their debt load. Did they expand too much, and what's going to go on there? But let's go to the stock indices, and I know I'm a broken record because you're still down for the week. 39 points on the S&P. So you get a rally back today and it makes you feel good, but the market is still basically under selling pressure. When you take a look at what happened, you stuck your nose down today, and when we get to the 200-day moving average of closes, you'll understand what happened again, like a broken record. But as you look at this, that is a market that has been leaking away, and it got a bounce back today and was able to close higher. A nice recovery, don't get me wrong. You got down to 25.91, and in terms of trading, that's 40 handles higher. Sometimes that's a whole month's move, but in these markets, you're getting quite a bit of intraday movement. The pattern on the chart is one of lower highs and lower lows. That is bearish. We're still nowhere near the break load that we had back in February. In terms of moving averages, let's start here. There's the 100-day average. The 18 happens to be right in the center here, and that's the number I so often say. That is the line in the sand, the center line, where markets fight for direction. What we did go down to and hit again was the 200-day. So we hit it here. We got just within a hair's breadth of it back here. You know that we've hit it in those areas. We keep flirting with that number. Is it going to be enough to support the market, or do one of these times we close under it and traders start to get very nervous? It would be real ugly if you closed under it ending the week. That could create havoc in some of the markets. What else held the market? I'm going to carry you back here a little bit. Here is the 200-day moving average, this bigger, thicker line. This one is the Bollinger Band. I want you to see what I said yesterday. These two are coming together for your support area. You went down today, kissed them, and bounced away. That's all that you can say. When you come to the momentum, you are oversold. So we have a market that's oversold in a downtrend. The bias is down, and it hit a bunch of downside targets for those that were bearish in the market. And I wouldn't be surprised if we saw some short covering there. In the NASDAQ, this has joined now the other markets in a downtrend. It hadn't in quite a while. It's in a lower high, lower low number. The close today at 66.64.5 was under the 18-day average of 66.73.67. So to negate this downtrend, the market has to take out the last rally high, which was 67.29.50, which is just over the 100-day average in green as well. So This market is bearish at this point. I would expect to see selling. The problem is because of the volatility, that's a 50-point risk to go short against the 18-day average with a stop over that high. That's probably too rich for a lot of people's blood. When we come to the Dow, let's go back again to yesterday. Here is the market. And coming in, it had a higher high and a lower low, oversold. If it fell further, the lower Bollinger Band and then the 200-day moving average of closes could be the next targets. It goes down today, just like in the S&P, hits and bounces. What are we? Oversold in a downtrend and have hit some downside targets. In the Russell 2000, this is a market that got to the lower Bollinger Band, not the 200-day. Hasn't actually been down there since the beginning of April. Found its support. It's got resistance up here. Now the market is one of these that, if you take a look at this high, which is 1568.10, and you look at this high, 1567, you have a higher high, right, than that one, but a lower low. You stepped out of your trends today. In the VIX, all you did is go sideways against the 18 and the 100-day average of closes. You stuck your head up today. You got to 1866, which is shy of the upper Bollinger Band at 1994. Not much that you can say. We were looking, at least I was looking, for the market not to break down into this area back here, and it hasn't. That's pretty much it. Now you're stuck between these upper and lower Bollinger Bands and a trendless market. And that's probably the key here. Volatility is trendless at this point. It doesn't grab one way or the other. In the T-bond market, when you lost the shot of an embedded reading here, getting back to the 18-day average, no surprise. You'd have to close over that to think you could get even remotely friendly in the near term. In the 10-year note, when you lost the embedded reading, and that's right here, this is called an embedded reading. It's when the momentum that makes up the slow stochastic, SSTO on the bottom, when the numbers are going under 20 sideways. If you believe, as I do, that momentum often leads price, it is not always, it's often. Then what happens is if that red number closes over 20, it often happens before price hits that 18-day average of closes. And it can jockey you back and forth and you go, I don't know what's going on there. In the meantime, you can get the 18 to slip a little bit like it's doing right here, and then the two can get together very easily. Now, it hasn't quite hit it today. It's shy about 1.5 points, but on a steady opening, it probably will graze it, as I'd like to call, and the two have come together to figure out what's the next trend going to be. Let me bring this one up, too. This is TLT. We have our ETFs back and working. I have no say in it. It is the vendor. And they've had troubles with the quotes bringing in because they're primarily a commodity firm, but they found the problem and it's all working. And tomorrow when I do my gold and the other markets that you like me to do, I will bring back in the ETFs for you. But as you can see in the TLT, you've got pattern of lower highs but higher lows. I wouldn't touch anything like that as a trader. That's not a trend. A trend is made up of, if it's a downtrend, lower highs, lower lows. Uptrend, higher highs, higher lows. When you have a pattern of a lower high and a higher low, you're just narrowing in, and that's what this market's doing. The battleground is the 18-day average of closes. To get the trend down, you've got to put this market under 118.23 again. To put it into an uptrend, you got to close over this 119.56. In the dollar index, yeah, the market's seeing a bit of a correction today of 8 points, but it hasn't given up any real ground. Amazingly, I'm not hearing an awful lot out of the teams, our delegation team in China. I know that the soybeans rallied today about 10 cents when somebody said that the negotiations are going pretty well. Then I went on to the internet and I was checking. I'm not seeing anything coming out of there yet, so I don't know where they saw that, but I'm sure that they did. Higher lows, higher highs, 1 day over, back day under, the upper Bollinger Band. As long as you stay embedded, this market stays bullish. As long as the euro currency stays embedded right through here, that I explained earlier, riding these lower Bollinger Bands can take you anywhere. British pound, same thing. I hope you're getting the idea that when you get an embedded reading, it's quite strong. The trick is trying to catch the move as much as you can before it loses the embedded portion to it. Japanese yen. When we reopen tonight, I will be looking very hard to see, do we keep the embedded reading? What else do you see on this chart that you should pay attention to? Look at how the 18-day average is starting to get down to the 100. We haven't seen those numbers crisscrossing each other since back here at the beginning of the year. This would be a bearish crossover and could spell even further trouble for the Japanese yen if you believe that bearish crossovers have a meaning. I think both bullish and bearish do. In Bitcoin, you're hugging. Yesterday, let me show you this. This is called the embedded reading. You lost it on Wednesday. Now, the only time you can get it back is the very next day. It is a sign of a market waffling with its trend. Guess what it did today? It got it right back. So it tells you what's going on. Yeah, we're waffling, but the trend remains up until that is lost. And if it's lost, I'd only look for the 18-day average to come back into play. In the Brent versus WTI, each day that goes by, we're already at the 3rd. Tomorrow we're going to have 9 days left maximum before the president makes a decision. Which way is he going to go on the Brent oil? In other words, is he going to say to Iran, no, we're out of the deal? Is he going to say we're in it, but we're not going to accept such and such? Nobody seems to know, and he's playing it very close to the vest. It helped Brent to see that a terminal in the North Sea went down today, and it won't be back up, they're saying, till Sunday, and that's 80,000 barrels a day. So the spread widened again. That added what? Less supply to the market, and you could see how the market was holding. This is what I call, and I know it's not professional, but it's what I always use. It's called an ugly chart pattern. Where's the real high and low in the market? See these two spikes here? They throw the whole chart off, and that happens from time to time. In other chart patterns, you get to see them, but every now and then you get one of these, and what I let the market do is restructure. What is happening is the upper Bollinger Band and the lower one are racing in because volatility's been coming out of the market as everybody's waiting to know what's going to happen on this part of the marketplace. Same pattern exists in the WTI. It was up 50 cents today. You were up 35 in the Brent, so they both held on actually pretty well, which was nice. Gasoline market fighting its battle against the 18-day average of closes. It's hard to want to be short gasoline, isn't it, when you turn on the TV and all you hear is, hey, let me tell you where the cheapest gasoline is, or, you know, nationwide prices are now over $3 a gallon and refineries are saying they're going higher. Well, you got a correction and they capture you because you're listening to the news. I learned a long time ago that when you watch the evening news, you're watching old news. I'm not talking daytime financial news. That's right on the money. But when you're watching the evening traditional news, ABC, CBS, NBC, the news that you see there that can be a market mover is old news. When I look at nat gas, now you're back into a trend of downtrend. Lower highs, lower lows. Please take a good hard look at what's going on between the 100 and the 18-day average. They have converged on each other. If this market starts breaking out to the downside with that, this could be a very important top that's being made in the marketplace. I say top because there's just so much supply, and now we're at that funny time of the year where until it gets warm again, the demand for natural gas sinks away. You know, we're in the 60s, the 70s. We're not in that 100-degree weather. We're not in the 80s, 90s, sweltering on certain parts of the country. And I'm talking the East Coast, where the next real demand is going to come from. So you put that all together, you got the clean boards behind me, and here's our modern trader technical trading tips from the top pros. Could be something you want to add to your library. What we did with our friends from Modern Trader is we made these into PDFs. All you need to do is go to our website, Sign up. We'll get this as an email out to you right away. We don't keep it on the website. We send it out as emails to everybody. I think you'll find that these stories are great. Gives you an idea how do you optimize stops, some different Gann theories. Where do you go with it all? You can call us. Go to our website. You'll see a carousel of offers. You can click up here at any time, or under us on many websites it says click here for Ira's free offers. I'm Ira Epstein. You have a good day.